On the heels of Black Friday, markets turned cautious again yesterday, erasing an early gain and ending lower. This comes as investors try to handicap how much the new coronavirus variant will impact the economy. Stocks rose broadly in midday trading on Wall Street on Thursday as investors continue to monitor the spread of the new variant, as well as measures that the U.S. and other governments are taking to restrain it. Wall Street was already headed lower in the afternoon yesterday when the White House announced that the first confirmed case of the Omicron variant had been found in the U.S. Well, joining us now to talk more about how Black Friday and the new variant are impacting the financial markets is Brendan Caldwell, Director of Caldwell Securities Ltd. Brendan, welcome back to Forum Daily.
Thank you, Nima. Great to be back.
So let's start with this stock market drop on Black Friday. You would expect the markets to react positively on Black Friday. So what is behind this?
Well, everything's on sale on Black Friday, Nima. Isn't that the way it's supposed to be? The day between Thanksgiving and the holiday and the weekend. So it's a semi-long weekend in the States. And but I think what you have to remember is that if you're in the office on Black Friday, on that Friday between Thanksgiving and the weekend, either your company or your family deeply and profoundly hates you. So, I mean, you're not there because you want to be there, and there aren't very many people there. So any bit of news that could take the market up or down is likely to be exaggerated simply because there are relatively few people trading, and thin volumes, very little in the way of back and forth, tends to exaggerate market moves. So with a bit of bad news that there is this Omicron variant, that hit the market, I think, disproportionately hard on Friday because everybody was so short-staffed.
All right, Brendan. Well, factoring in the Omicron variant, we saw a lot of market activity when it was first announced inside the United States. So should investors be particularly concerned about their investments at this time?
No, because one has to remember the market always shrugs off political news. What are you talking about, Brendan? This is a medical thing. It's not political. It's political. In as much as this, yes, it's medical, and yes, it's serious, and yes, this has been a big issue for the globe. But what I mean by political is 9/11 was a political issue, and markets at the end of 2001 were actually higher than they were the day before 9/11. So extraneous bad news that gets people riled up, whether it's elections or a terrorist attack or this new variant, I term as political. These are temporary blips on the market. If anything, to the extent that interest rates stay lower because of people are concerned about the economic recovery, that's going to have a net positive effect on the market, I think, anyway.
All right, Brendan. Well, considering all this activity on the markets, do you think investors should wait it out until maybe the markets are a little bit more stable?
No, because there'll never be a good time. Because I can tell you that one of two things is going to happen, Nima. Either the market's going to go up or it's going to go down. And if you wait and the market goes down, you're going to say, see, I was right. Well, it can go down more. Or if it goes up, you'll say, darn it, I'll have to wait till it comes back down again. The best course of action is dollar cost averaging. And whether you're talking $100 a month, or if you have $1 million to invest, starting with 100,000 of it, whatever your number is, start by putting a little bit of money to work, even if it's just 10% of what you intend to do in total. Because then if you put in a little bit of money, the market goes down, you can say, I can dollar cost average down. Or if it goes up, you can say, glad I did something, let's do a little more and see how it works out. And I can do a little more and do a little more. If you don't do anything, it's so much harder to do the next thing. If you do a little bit, not so much that it's going to risk your financial well-being, but just do a little bit, you'll find yourself in a better headspace to do the next right thing.
All right, Brendan, some good advice. Just over a minute left here, but jumping to another topic, we're seeing a lot of CEOs of big companies step down. We saw Jack Dorsey of Twitter do so. What do you think is behind this trend?
Well, I think there's two things. One, there's the bigger picture, like Bill Gates from 20 odd years ago when he turned over Microsoft. There's comes a point when a founder can take a company so far, but not any farther. And it's time to turn on professional management. That might be a little bit of what's happening here, but I think part of also what's happening here is these big companies, Twitter, Facebook, now Meta, Google, I think they are dealing with a significant PR issue because of the impact they're having on the world and society as a whole. And I think they're looking to put a whole new face, whether they change their name in the way Facebook did or change their leadership. I think they're trying to reimagine themselves, at least, in terms of the presentation to society and to the regulators, but I hopefully also changing the way that they do business such that their social good outweighs their potential social harm that some of these big companies may be doing.
All right, Brendan Caldwell, always great having you on Forum Daily. Thank you again for your time today.
Thank you, Nima.